Welcome, hi everyone. I will begin by explaining the reason for company selection, the industry relevant and the importance of financial ratio and forecasting. Firstly, Sunway Group and Genting Malaysia Berhad were chosen because both companies have a strong presence in the tourism, hospitality and wellness industry in Malaysia. They are well-established companies that play an important role in supporting tourism activity and attracting both local and international visitors. In addition, these two companies have different business model and scale, which allow a more meaningful and effective financial comparison to be made. In terms of industry relevance, in Sunway Group operate hotel, healthcare center and recreational development. This operation support not only tourism and hospitality but also wellness, especially through healthcare and lifestyle related services. On the other hand, Genting Malaysia Berhad manage large integrated resort and leisure businesses. Its operation focus on entertainment, accommodation and resort services that cater to both domestic and international tourists. Lastly, financial ratio and forecasting are important tool in this analysis. Financial ratio help evaluate the company profitability, liquidity, solvency and efficiency, which show how well the company perform and manage its resources. Meanwhile, forecasting help predict future financial performance, allowing company to plan ahead, make better decisions, and ensure long-term sustainability. Thank you.
So my part is the background of the company. First, I will explain about the Genting Malaysia Berhad. Genting Malaysia was established in 1918 and later became Genting Malaysia Berhad in 2009. The company has been listed on Bursa Malaysia since 1989, showing its long-standing presence in the tourism and hospitality industry. Genting Malaysia is the best known for operating Resort World Genting, which is one of the Malaysian most iconic integrated resort destination. The resort offers a complete leisure experience, including hotel, casinos, theme park, entertainment, and retail outlet. Besides Genting Highland, the company also operates other resorts such as Resort World Langkawi and Resort World Kijal. This making Genting Malaysia as a key player in Malaysia tourism sector. Okay, next I will move on to the Sunway Group. Sunway Group was founded in 1974 by the late Tan Sri Jeffrey Chia. It started as a small tin mining company but has grown into a large and diversified conglomerate. One of its most important development is Sunway City Kuala Lumpur, which is a fully integrated and sustainable township. Today, Sunway is involved in several core sectors including property development, construction, retail, hospitality, education, and healthcare. The group adopt the build, own, operate or BOO model, which allows it to develop, own, and manage its key assets. Sustainability is also a major focus of Sunway, as seen in its long-term commitment to responsible and community-focused development.
Hello, my name is Zulaika. I will present for the trend analysis of Genting Malaysia Berhad for the year 2023 and 2024. First, for liquidity ratio, all liquidity ratio declined from 2023 to 2024. The current ratio fell from 1.29 to 1.05. The quick ratio from 1.2 to 0.98 and the cash ratio from 1.06 to 0.89. This indicates the company's ability to meet short-term obligations become tighter and overall liquidity was stronger in 2023 compared to 2024. For efficiency ratio, show mixed result but some improvement. Asset turnover increased from 0.24 to 0.26 and account receivable turnover improved from 28.87 to 39.49, showing better asset use and faster collection. Inventory turnover decreased from 47.37 to 41.41, indicating slower inventory movement Overall efficiency and receivable collection improved despite slower inventory movement. For solvency ratio, indicated slightly higher financial risk, debt to equity increased from 0.64 to 0.67 and debt to asset from 0.35 to 0.36, showing more reliance on debt. However, the interest coverage ratio improved from 2.75 to 2.89, meaning the company can still comfortably meet interest expense. Lastly, for profitability ratio remain stable overall. Gross and net profit margins stay at 0.27 and 0.10 respectively. Return on equity improved from 0.04 to 0.05, while return on asset remained at 0.02. This shows consistent profitability with slightly better return to shareholder. That's all. Thank you.
2024, the cross-sectional analysis showed that Sunway has a slightly higher current ratio of 1.11 compared to Genting 1.05, which means Sunway is marginally better at covering in short-term liabilities. However, Genting demonstrates stronger overall liquidity because it recorded a higher quick ratio of 0.98 compared to Sunway 0.74 and a much higher cash ratio of 0.89 versus Sunway 0.30, indicating that Genting has more cash and liquid asset available to meet immediate financial obligations. In terms of efficiency, Genting clearly outperformed Sunway as its asset turnover ratio of 0.26 is higher than Sunway 0.10, showing better use of asset to generate revenue. Its inventory turnover ratio of 41.41 compared to Sunway 0.46 indicate faster inventory movement and lower holding costs, and its account receivable turnover ratio of 39.49 far exceeds Sunway 0.60, demonstrating faster collection of receivable, stronger cash flow, and lower credit risk. Overall, Genting shows stronger liquidity, quality, and significantly better operational efficiency in 2024, while Sunway only has a slight advantage in terms of the current ratio.
Assalamualaikum and hi, my name is Siti Atrapiti Aferi. I will present a comparison of solvency ratio between Genting and Sunway. First, the debt to equity ratio. Genting records 0.67 while Sunway records 0.63. This shows that Sunway is slightly more conservative, which indicate lower financial risk. Second, the debt to asset ratio. Genting is 0.36 and Sunway is 0.34. This suggests that Sunway has a slightly stronger solvency position. Third, the interest coverage ratio. Genting achieved 2.89 compared to Sunway 2.04. This means Genting can cover interest payment more comfortably, while Sunway still maintain a sufficient buffer. Next, let's look at the profitability ratio of Genting and Sunway. First, the gross profit margin. Genting records 0.27 while Sunway is 0.08. This shows that Genting is more efficient with stronger pricing power and better cost control. Second, the net profit margin. Genting has 0.10 whereas Sunway achieved 0.16. Despite Genting higher gross profit, Sunway managed its costs more effectively, resulting in higher overall profitability. Third, return on equity or ROE. Genting posts 0.05 compared to Sunway 0.03, indicating that Genting generates slightly better return from shareholder equity. Lastly, return on asset or ROA. Both companies record 0.02, which means they are equally efficient in generating earnings from their total asset.
Warahmatullahi wabarakatuh. Today, I will present an overall analysis of Genting Malaysia Berhad and Sunway Berhad for 2023 to 2024. One is liquidity. Starting with liquidity, Genting's current quick and cash ratios have declined, which shows a need to improve working capital. However, Genting is still stronger than Sunway in quick and cash ratios, while Sunway has slightly higher current ratio. Two is efficiency. In terms of efficiency, Genting outperforms Sunway with better asset, inventory, and receivable turnover. This shows Genting's operations are faster and resources are used more effectively. Three is solvency. For solvency, Genting has highest leverage but a strong interest coverage ratio, meaning it can comfortably pay in its interest. Sunway has low debt but weaker interest coverage. Four is profitability. Looking at profitability, Genting has a highest gross profit margin and return on equity, while Sunway has a highest net profit margin. Return on asset is similar for both companies. Recommendation for Genting: the focus should be on improving liquidity, managing inventory, controlling costs, and reduce reliance of debt. For Sunway, it is important for increased efficiency, improve receivable collection, build cash reserves, and reduce operation expenses. Overall, Genting performs better overall, but both companies have areas to improve for stronger financial performance. Thank you.
Assalamualaikum. My name is Sifa Mahira binti Kamis. Today, I will present conclusion. In conclusion, Genting Malaysia Berhad and Sunway Berhad show different financial performance due to their business models. Genting Malaysia Berhad demonstrate higher operational efficiency and stronger liquidity, enabling better short-term obligation management. Sunway Berhad reports a higher net profit margin and maintains a more conservative capital structure with lower financial risk. Genting is more suitable for efficiency-focused investor, while Sunway appeals to risk-conscious long-term investor. Both companies have room for improvement to strengthen weaknesses and sustain competitiveness. Thank you.